Some good news this morning. The odds of a recession in the next year are going down. According to Morgan Stanley, there is only a 25% chance that a recession will happen within the next year. Certified financial planner Gary Abely joining us now to talk more about it. Gary, good morning. Good to see you.
Good morning. How are you?
So what do you think about this news that we've got a less chance of a recession in the next year?
Well, I think it's great for everybody who is wanting to make sure they still have a job.
Yeah, and
but, you know, we, of course, look at it from an investor perspective, and really recessions aren't such a bad thing. So just to give our viewers some perspective, recession is just 2 consecutive quarters, at least 2, of a decline in growth in GDP. And so they can last as little as 2 quarters, and of course they can last years, and nobody likes them. Consumers cut back their wallets, they stop spending, but recessions are normal. We've had about 10 of them since World War II. So they happen about every 7 years, and they're usually combined with what we don't like to talk about, a bear market, you know, a drop of 20% or more in the stock market, and that's what gets investors a little bit unnerved. But we like to say that's a good thing, because let's say you're in a portfolio where you have 50% stocks and 50% bonds. So as those stocks go down, you're actually going to rebalance your portfolfolio and buy more of them and actually have more shares at a lower price. Okay. So it's actually good for the investors in the long haul.
What about interest rates during a recession?
Well, and that varies. So interest rates, depending on what the Fed policy is, they may want to cool off an economy that's, you know, going too fast, and so they may want to raise interest rates. And so then that causes consumers to have less money to spend, because maybe their credit card payments go up, their mortgages, if they're adjustable, may also go up. So interest rates can put a damper on consumer spending.
Okay, what does it mean for the young investor or the new investor getting into the market approaching a year without a possible recession?
Well, and we would say ignore recessions, ignore bear markets, especially if somebody's young. So I can unequivocally tell everybody that every recession we've ever had has been followed by an economic expansion. Every stock market correction, every bear market has been followed by a bull market. So to worry about these things that happen on average every 7-8 years is really not a good thing for the investor.
So really the key here is patience.
Patience and sticking with a long-term investment plan will help you be successful.
Okay, where can people find you, Gary?
They can find us at financialgroup.com.
Okay, very good information. Right. Always good to see you.
Nice to see you.
Patience is virtuous, right?
Yeah, exactly.
Especially when it comes to investing. Stay with us. There's still more.